Good morning, good morning. So today is Wednesday the 29th of July. We're coming to the end of July. Welcome to the Cressivo channel. This is the weekday live stream where we walk through an account and help you understand your trades better. It's not about making money, but it's about not losing money. We focus on realized gains. We focus on selling puts and selling covered calls. That's it. Trading can be hard if you make it hard. You can spend your time looking at 8 million different things, different indicators, moving averages, MACD, RSI, all these different things. You could look at all these different tickers, right? There's I don't know, a billion, maybe not quite a billion, but I'm exaggerating. But there are so many tickers that you can trade. And it can be confusing. So in this channel, I tried to break it down to you nice and easy and tell you the important things that you need to focus on in order to be successful. And while I'm doing that, the easiest way to teach is to kind of do it exactly as we go, right? Walk you through all of the positions. So that's what we're doing here. This is the account that I started trading a few weeks ago with $100,000. And right now the net asset value, the liquidation value is 75, but that's totally okay because if we look at the if we look at the realized gain right here for the account since I started, $5,500 in premium. That is the thing that helps support your lifestyle, that pays the bills, that lets you do fun stuff, right? So that's what options can do for you. So let's go through kind of a couple positions. Let me know in the chat if you guys have questions. This is a great opportunity to have your questions answered. Oftentimes when we as traders, we think that we are on an island somewhere, right? So there's not, a lot of other people perhaps in our circle of people that we interact with that trade options. So this is a great opportunity that you can be in that circle of other people who are doing exactly what you're doing, and you can learn that way. So here's the positions, right? So a couple of things that I want to go through. Number one, a lot of times people talk about, okay, I buy this stock and then it goes down and now I'm holding the bag. What do I do? Man, if it's a good stock, you buy more shares. So Oracle is a perfect example of that. So I had already 100 shares of Oracle that I paid a lot of money for, $244, right? And then the stock dropped kind of like a rock. That happens. It's not like an unanticipated thing. Those things happen with this ticker, with other tickers, with all tickers. That's the function of stocks. They go up and they go down. Instead of just waiting, because if the stock goes down, you can't really sell a covered call. You don't make any premium. So what do you do, right? So you could do one of a couple things. You can freak out and sell your shares and then take a realized loss. You don't want to do that because realized losses hit your pocket. So why would you do that, right? Or you can sell another put and take in more premium that way. And then if you get assigned, you buy those shares cheaper. And then you can sell a call to that particular lot. So here's a perfect example. I had bought another 100 shares. We show it kind of the way the fill happened was a mix of shares, 53 shares at this price, 23 shares of this price. But I bought another 100 shares the other day at $119, 118 and change. And so afterward, what I did was I sold a 119 call and I took in $330 for that. So instead of just sitting and waiting and sitting on my hands, you might say, and praying and hoping that the stock goes up, no, you're being interactive. And this is the reason why you cannot have a portfolio full of a whole bunch of tickers. Because when you do it that way, you don't have enough cash to target each ticker. What I want to do is I want to have enough cash to target each ticker so I can buy more shares as it comes down. Because listen, and I feel like I say the same things over and over again. And sometimes repetition is the mother of skill. You just have to keep hearing it and then you have to keep experiencing it to really let it be ingrained, and then you're a pro when you're trading. Anybody can do this. You don't need You don't need like necessarily stock market experience. You don't need to be some like MIT graduate or be good in math or have graduated high school or gone to college or any of those things. That's why I try to make it simple for the everyday retail trader to do. You can be successful just trading puts and covered calls. Don't just trade stock. That's for what's the word I'm looking for? I'm trying to like, I'm scanning words in my brain right now because I don't want to sound rude, right? Like sometimes I can be a little bit abrasive. My kids tell me that. My daughter especially tells me that often. You know, mommy, like, she still calls me mommy, by the way. She's 26 years old. Funny. And she says, mommy, you know, you're rude. So I try to pause and not come off as abrasive as sometimes I can be. People that just trade stocks they just don't know. They just don't know any better. I'll just put it like that. Because there's no reason in the world that you would trade stock and be okay with getting paper gains when you could do it this way and put cash in your pocket and spend it. Listen, cash is king. Last night I was talking to a friend, Melissa, a friend of mine who I met in Bali. I lived in Bali a few years ago, for a couple of years actually. And she's an American, and she wasn't living in Bali at the time. She was living in Thailand at the time. But I met her in Bali. And she was talking about going to Europe, and we were talking about doing like I forget what it's called. It's like this walk where you walk from Portugal to Spain. Actually, Portugal is here and Spain is higher. And anyway, I'm planning this trip with her. I'm not sure exactly when I'm going to go. Maybe next month. I'm not sure yet. But options trading helps me and enables me to do things like that. In order to like, okay, let me just book a flight and let me just hop to Portugal and let me do this like I think it's like a 12-day walk. I think it's like, I don't know, 15 miles or something like that. I would not be able to do that if I wasn't trading options. And when you trade options, you can really take ownership of your life and do what you want, when you want. And I think that's what life is for. It's not for, you know, hey, you know, I got to get up, I got to set my alarm tomorrow for 5 in the morning and I got to go drive, you know, 45 minutes in traffic to go to this job that I don't really like anyway, or that kind of thing. No, it doesn't have to be. So your life is whatever you make it be. And my motivation is to help you guys see that and use trading in order to do that. So going back to Oracle, I had sold this for $330. So instead of sitting on my hands and knees or whatever and waiting and hoping that it goes back up, I'm actively targeting that stock because I like the stock. I think it's low because whatever, it's low. I did the same thing this morning with SMCI. So I already had a 200 shares of SMCI. So we'll see right here, I had 100 shares that I bought a while back, right? $47. And then on the same day, I got assigned this put, $45. Now the stock is at $27. So stocks drop for lots of reasons. It doesn't really matter why, because fundamentally it is still usually 99 times out of not 9 times out of the 10. I would say like 999 times out of 1,000. That's the real like average that I would estimate. There's nothing fundamentally wrong with the company. Like it goes down, like SMCI went down a while ago because they had a few people that like, I don't know, got caught, I don't know, trading chips with China that was illegal and that kind of thing. But it's still the same company, right? So if it's the same company and I like the stock at $40 or $47, what I paid for it, $47, I like the stock at $27. I like it more at $27. So this morning what I did was I bought 100 shares right here, $26.83. And then what I did, so check it. So then I sold a $27 call. That expires on Friday. Today's Wednesday. So I like short-term stuff, man. I don't want to tie up my money for long periods of time. I don't know what the market's going to do tomorrow or next week or next month. I want to just keep flipping my money and just creating cash to stuff in my pocket so I can spend it and go buy a flight to Portugal to go meet my friend Melissa. So that's what I'm driven by, right? What drives you, obviously, it might be different, but you can use options to help you achieve whatever it is that's driving you. And how much did I make on this contract? $86. Now, it's not a lot of money, right? I'm just going to pull up a calculator. And I can use my app for a lot of this stuff, but I'm going to show you just how easy you can do if you're not an app subscriber. I like to show a lot of different things because this is not hard stuff, people. I mean, I would say the hard stuff, the easy part is like you got to put some time and effort into understanding the concept, right? Sell a put. What does that mean? I'm committing to buy someone else's shares if that stock crashes. And they pay me a premium for that commitment. I keep that no matter what happens. I buy the stock if it goes down. If and when I buy the stock, I sell a covered call against those shares. What does that mean, Michelle? That means I'm just promising to sell my shares if it goes higher. Well, that's like a no-brainer. Like if I paid 100 for it, I'm happy to sell them at like 101 or whatever. Like because I paid lower and I sell them for higher and I get paid a premium again. So it's easy to understand. You got to put a little bit of time and effort. I would say it takes a few hours to kind of understand the initial, like the foundational mechanics of it. And then after that, it's like finesse. It's kind of like dancing, right? Like you got to learn the moves. And these are the moves that I'm showing you. And I'm showing you this in a free live stream, which is great for those people that like have some money behind them, 100,000, a couple 100,000, and they want to make massive change in a short period of time. Reach out, and because I work one-on-one with people, not a lot of people, just a handful, because there's not enough time in a day, right? But these are the things that I help you understand. So going back to, where's my calculator here? So going back to making $86. Now, sometimes people might say, $86, what the heck is that? Man, when you put 86 in my pocket now, and I put 100 in my pocket later, and I put whatever in my pocket later. Somebody texted me earlier, somebody that I work with, and she texted me, that's $535 net premium today. That's what options trading does. And now let's not just look at the raw premium, but let's look at the rate of return. So I made $86, and how much did I put up? I put up in this trade $2,800, right? Because I paid $26.83 for those 100 shares of SMCI this morning, right before a couple hours ago, before I did this live stream, or before I'm doing this live stream, divided by 26.83. So my rate of return is 3%. Man, I'm making that for 2 freaking days. Today's Wednesday, so maybe like the rest of Wednesday, and then all of Thursday and all of Friday. Let's say 3 days, right? So if I'm making 3% over 3 days, I'm making over 1% a day. Scratch that, a day. I'm making over 1% a day. 1% a day on your money. How many trading days are in a year? Well, there's 252 trading days in a year, approximately, right? So because we don't trade on the weekend. So let's just be conservative. I'm making 270% on this trade that I did this morning. And worst case scenario, let's talk about that. Because listen, guys, it's super easy to make money. And all the magic happens on risk management. So let's talk about what happens if this happens and what happens if that happens, right? So if SMCI stays over what's my strike price? Over $27, then I'm going to sell my shares, right? I'm going to sell not any shares, but I'm going to sell these shares that I bought this morning. I'm not going to sell these higher basis shares. I'm going to sell the shares that I bought for $26 and change for $27. So I'm going to make, like $17. That's not a lot of money. But what I focus on is I made the $86 in the premium. So that's one scenario. The other scenario is, let's say SMCI goes down or stays where it is, right? Then that's okay. Then this is going to expire worthless, this call, and I'm going to sell another one on Monday. That is how you keep hammering your tickers, so to speak, and create income on a regular basis. And you cannot do that, by the way, if you have 10 different things in your account. Because number one, it's confusion, right? I'm telling you, a lot of this stuff is mental. You don't realize it, but it's mental. You cannot pay attention to 10 different things. You just cannot. At some point, you're gonna something's gonna, one of those stocks is gonna be doing their earnings and you're not gonna realize it, and it's gonna go down, and you maybe didn't anticipate that, or you would have wanted an opportunity to think that through ahead of time. Or more importantly than that, something that you bought for $100 is going to be at $50 at some point, and you're not going to have enough money to sell another put. So you must really just trade a handful of things. Less is more. Less is more in trading. Less is more in life. Like, I've been moving around a lot over the past like 10 years. I've lived in tons of different places, some places at the same time. You know, for a while I was like Virgin Islands and Los Angeles and Bali, those three places, right? And then I was like New York and LA for a while. And over all those periods, I get rid of stuff, right? Because like less is more. I don't need a bunch of shit that I don't use, right? Like clothes or furniture or, you know, I don't know, lots of different things. Anyway, less is the moral of the story is less is more. It's like that for life, and it's like that in trading, right? So I wanted to show you that. I'm going to get to the questions as well in a moment, but I wanted to show you this other cool thing. Let me show you this HPQ. So I have these, this is actually a really good illustration. I have these 100 shares of HPQ. We can see that here, right? And I had gotten those because I was assigned on a put a while back, and the cost basis on that is $26 and change, right? And right now the stock is trading at $28.85. So that's what the finesse that I'm talking about. That's why people need to understand these things. Like, you can learn it. You can either pay the market in mistakes, or you can like hire a mentor. And again, this isn't a commercial, but sometimes when I talk about some of these things, it pops into my mind like you can either, you're going to lose money learning one way or another, or spend money learning one way or another. So for example, and I'm showing you how we walk through this, right now it's almost like $2 more than what I paid for it. So now I can do one of a couple of things. I could just wait. I could just like ignore that and let me just wait. But I don't like to ignore things. I like to like pay attention. Like, okay, maybe it's better if I close that position. I don't know. Like, I got to walk through the steps in order to look through that. Like, I gotta walk through it to see, is that a good decision or is that not a good decision? You don't want to just blanketly say, I'll just wait till Friday. You don't do that, right? You want to walk through, what if I did that? And here's a tool that you can use to do that. So it's called Analyze, Liquidate, or Wait. So here's the option. So let me just click the button and freaking magic happens. So check it out. So this feeds and populates with my positions. So, and this is what this is doing. It gives you a little bit of information. I don't want you to be confused by what you're looking at. I try to put as little information on the screen as possible to make it understandable. This means like, okay, if I was to buy back my call now, I would pay money for it because it's trading for more than what I got paid originally. And at the same time, like right afterwards, sell my shares. How much would I make? You can't analyze that unless you calculate it. It's just, you cannot. So I would make $5. So not that much money, right? I think like an hour ago when I ran this, it was like $26 or something like that. Or if I wait until Friday, I would make $32. Again, not a lot of money. It's not about the money. It's not about the dollar value. I'm walking through the steps because this works on big trades, small trades, any trades. This is an inexpensive ticker, and it was a small call. So that's why it's not that much money. But what it shows you is, okay, well, if I wanted to close it now, I would take the risk off the table. So in what scenario, Michelle, would this be applicable? So sometimes people would say, okay, like I got too many tickers. Just as an example, I got too many tickers and I want to slim down my list. So let me get rid of this HPQ. I don't want to look at it anymore. I just want to get rid of it. So you might do this right now. Or you can wait, but without the information, like you're making a decision blindly. I'm going to give you an example. This is I try to use analogies with real world, right? Because trading is like real world stuff. So the other day, I don't know, a few days ago, I was talking to my mother on the phone, right? So she lives in Connecticut, and she lives in a house. And for those of you, I don't know, a lot of you guys are in different places of the world. She's got electric heat, and so it's not warm all the time where you run air conditioning, but in the summertime it's hot, so you run air conditioning, and in the wintertime it's cold, so you run the heat, right? So you use electricity for that. So the electric bills are really high generally. And so sometimes when I'm talking, she's older, I don't know how old she is, she's like, she's 74, I think, right? So, and she's not working. So a lot of times not recently, but I'll talk to her, and she doesn't run the air conditioning in the summer because she tries to save money. She doesn't run the electric heat in the winter because she tries to save money. And I told her a few days ago, like, why don't you look at solar, right? Look at solar because it could be like you could put some solar panels on your house and cut your electric bill from like $400 to $100. And she was like, no, I don't want to look at that. Like, it's not going to work for me. I don't even want to look at it. So instead of investigating, she just squashed it, right? That's a bad move. Investigate, like, what you should do, or what are the choices and what are the consequences of each one, and then make an educated decision to move forward. That is what this does right here. So, and you just click a button to do that. So that's kind of cool. All right, let's go through some of the questions. Ryrome, I don't know how to say that name, Ryrome. And I think you're a new subscriber, so welcome to the channel. I know that you caught the past, I think, couple days live stream, and you've been putting some comments on YouTube. And by the way, I read all the comments on YouTube, and it's me that responds. It's not some, admin overseas or something like that, or AI. It's me responding. So welcome to the channel. Hi, Michelle. How much capital do you use every week? So that's a really good question. So it depends. So it depends on a couple of things, but I want you guys to understand, you don't want to put all your capital in at one time, because we don't know what's going to happen to the tickers. Like, for example, if I look at this list right here, AVGO, HPQ, Oracle, SMCI, and then I got some SpaceX, and then this goofy leverage ETF that I was showing you guys the other day. You don't want to put, and this is a margin account, by the way, so margin works a little bit different. Let me see. I don't know why my thing keeps flicking. I was doing some testing this morning, so let me just do something real quick so that stops flicking. Give me a second here. And, so anyway, you want to, this is a margin account, and so I have negative cash because I'm using some buying power, some money from the broker dealer in order to put these trades on. But you want to have cash on the side, or availability of cash, margin, it could be as well, to be able to sell another put to buy more shares and average your cost down. If you wanted some sort of a rule of thumb, I would never be more than, let's say, 75% invested at any one time, because we don't know what's going to happen tomorrow. We don't know what's going to happen tomorrow. We don't know what's going to happen next week. And we want cash to capitalize on those opportunities. Like, for example, AVGO, I bought 100 shares at $477, and then it came down so much. And because it's such an expensive ticker, I don't really have enough money to sell another put on that particular ticker. So you don't really want to do that. You want to make sure you have enough cash. You also want to make sure that the ticker price is consistent with the size of your account. So, for example, AVGO, I should have never put in this account. I'm doing different things to illustrate on these live streams. So these aren't necessarily trades I would make like with my own real cash. And because I want to show you guys, like, walk you through all those steps. But this trade you should never put in a $100,000 account, a stock that's almost $500, because it's too big. But if you wanted some sort of a rough idea, it's no more than 75%. And by the way, when you're looking for stocks, you can type in your capital here. Okay, I have $20,000 and I want to trade no more than 5 tickers, because Michelle said don't have more than a handful, 5 maximum, right? And then I want to be able to buy more if the stocks drop, let's say 25%. And the math on this module does it for you. So like, this is showing me, okay, I should only look at a ticker that's no more than $17 per share. So you can back into that answer like that. And by the way, these strategies work with all size accounts. These are not strategies like selling puts, selling covered calls, buying more shares, or any of these things. These are not applicable just for, let's say, a $100,000 account or a $500,000 account or a $50,000 account. It's applicable for any account. It's just the difference between a big account and a small account is you have to trade like less expensive things in a smaller account, right? So Joyce says, how do we diversify our portfolio better so that we aren't in tickers that all go up and down with market fluctuations? Does the app help with that? That's a really good question. So that's when we talk about like diversifying, like there's diversification is like having a bunch of stuff, right? Like, let me just put all these 10 different things and I'm safe, right? And that's not really how you want to look at it. So there's diversification and there's correlation. So typically, like lots of things are correlated. Like if you're trading AI stocks, as an example, let's say you're trading AVGO and you're trading SMCI is an AI stock and HPQ is an AI stock. So those are all like AI stocks, and one goes up. Typically, they all kind of go up. The only way to really get non-correlated things is to have like commodities is like a non-correlator. So like some sort of, gold, silver, oil, that kind of thing. Bonds and stocks are typically not correlated. There's not anything in the app right now, but that is a really good suggestion to add some sort of functionality. And as time goes on, this app gets like more and more like amazing, because there's a lot of things and that's a really great suggestion to add. In order to like help people, okay, here's what I have now, help me find a ticker that's not correlated to these tickers so I can, smooth out my return, right? So yeah, more to come on that. To clarify, all up and down together. Yeah, no, I definitely knew what you meant. And also, like, as I talk about like things, like enhancements to the app, that's a great idea, and I'm going to build that. It just takes time to build some of these things. The next big thing that comes out is going to be sort of like a suggestion page, not a recommendation. And you guys want to keep in mind, I'm not an investment advisor. I'm not giving you suggestions. I'm not making money off your, off of your portfolio. So there's certain like restrictions as far as like, I want people to understand, like, you take responsibility for your own decisions. So it's not necessarily like a recommendation, but I am in the process of building sort of like a suggestion. So based on your positions, like for example, let's say I'm looking at this as an example at this account, to drive a suggestion page that says, hey, first of all, you got too much AVGO, like that's too heavy for your portfolio, you shouldn't be trading that. Or hey, you got 300 shares of SMCI. You should, or you could look at like sell one call, let's say, to this particular lot, because I think that's helpful. As I have a way to impersonate users, and by the way, this is all like read-only stuff. So even when you connect your broker-dealer, there's no like write or like trading functionality or anything like that. It's just a read-only connection to make more educated trading decisions, right? As I look at people's portfolios, I think, man, these portfolios are all jacked. Not in a derogatory way, but like, for example, I was looking at somebody's portfolio the other day, and he's got, I forget, like 400 shares of whatever stock. And he had like 200 that he bought here, and then he had 200 that he bought here. And he sold 4 calls at his average basis, right? And so many people do that, but that's really not the right way to do it, because you make more money and it's less risk over the long term if you do what I showed you here. Like, for example, let's go back to SMCI as an example. Okay, I have 300 shares at an average $40, we'll say, 39 and change. I could sell 3 $40 calls, or I can sell one $27 call and then just wait on those. And it's better because, number one, I'm making more money because I'm selling a call at that lower price. And number two, it's more risk management because I'm like getting ready to shave off these 100 shares on Friday. So I'm like getting in, getting out, getting in, getting out, getting in, getting out, right? And the advantage of doing that is because I'm just creating income over and over again. Like, let's look at let's go back to the realized gain loss. The whole purpose is to create realized gains. Like, that's why you're trading. It's not about paper. What you want to do initially is like flip your brain, because we're all wired initially like what's my account value? I don't know. Like, so I met with somebody yesterday. How do I see my account value on the Schwab page? Well, you can go to the performance tab on Schwab to see your account value, but really that's not relevant. So your account value, your net asset value, the value of your account, which is here in positions, this number here, your portfolio value, it's called different things, but it's all the same thing. That's not really relevant, because that's just like, okay, if I liquidated everything, how much money would I have? The important thing is how much money did you create from the trades that you made, because that's the cash that you put in your pocket. So hopefully that helps you guys understand it a bit better. Brandon, man, I feel like these sessions fly. Do you guys feel like that? Let me know in the comments. You guys feel like these fly? I feel like I just turned it on 12 o'clock and now it's 12:30. Oh my gosh. And I got 4 more questions to do. All right, Brandon says, I'm selling calls below my cost basis on QQQ, but trying to be conservative with the delta till it goes back up. Good point. I'm doing that in this account too. Matter of fact, let's do that together, because I wanted to do that today. So for example, I have these 100 shares of AVGO at 477, and then I sold the 410 call that's expiring today. I sold it for 32 bucks. Right now it's trading at $1. So here's what I could do. It expires today. I could wait and let it expire, but generally I don't do that, because a lot of like what we call tail events might happen. What if something happens? Now the market's going to close in 29 minutes, but what if something happens in the next 10 minutes? Like, I don't know, the war breaks out with another country or something, and it drops this. Or actually, that's a bad example. What if something favorable happens with AVGO and it shoots up over the next 29 minutes? I don't want to actually sell my shares at 410, so I want to buy this callback. So let me just do that real quick. I have some extra functionality where I could just do it here, like just click into it. So I'm going to buy this. It's bid 0, ask $3. I'm going to try to buy it back for like $2. I'm just going to give $2 back to the market, right? And then after that fills, I can sell another call. So sometimes you can do that, Brandon. It's a little bit more management to do that, because you don't want to actually sell your shares for underneath what you paid, especially QQQ, because I think QQQ is like, isn't that like a $500 ticker, something like that? Let's see, QQQ stock, $600 ticker. So yeah, so you just want to be conscious of that. So I personally do it very, very short term. QQQ, I think, if I'm not mistaken, trades every day. Let me see. QQQ, I think they have daily expirations, if I'm not mistaken. And the way you can check that is you would just go here and just pull up the options chain. So we see 29th, 30th, 31st. So they have daily expirations. So I would do that super short term, and then buy that back and get out, exit that position. Just keep creating like little bits of income for yourself, right? Rome says, you said it correct. It's a combination of my dogs, Riley and Romeo. Oh, I love that. Rome. Riley and Romeo. I have 2 dogs too, Louie and Franklin. And Franklin is, he was named after the FDR Drive, because I was living in New York at the time, near the FDR Drive. He's kind of naughty. He's a puppy still. So he's, yesterday he chewed my flip-flops that I left out. Yeah, it's funny. Pete says, hi Michelle, what do you think about cash secured put on Intel August 7th at 75, $1.40? You know, I'll tell you, the best way to look at trades that have earnings coming up is to go to the earnings edge calculator. This is by far better than anything. And if you're not an app subscriber, you should be, because you can do this like yourself. I'm going to walk you through it. You could just type Intel here, and when earnings, oh, are you sure earnings is August 7th? This says earnings is October. October 10. Let's see. Intel earnings. I would have to check that. Intel earnings. Yeah, I think, Oh, maybe you're not talking about earnings. Maybe you're just talking about August 7th expiration date. I think I misread your question. So I wouldn't go there. I would just go here, let's say in the trade builder, and I would pull up Intel here, and you have to calculate your annualized rate of return. So August 7th, and then what were you looking at? $75 strike. $75 strike. So that's about a 20 delta. So 20 delta is that's the statistical likelihood that it's going to drop in price. So it would have to go down, and this app is so cool. Like, it puts all the math right in front of you, like the flick of magic. It'd have to drop down 11.1% to drop. Why can't I see a chart in there? I think I can see a chart here. I have to make some enhancements. Let me go here, and I can see a chart here. Let's see. Intel, August 7th. And what was your $75 put? Let's see, $75 put. And then here's the chart. I mean, it depends on, like, is that a good trade? Is it not a good trade? I mean, usually I'm trying to make like 50% annualized return. So if I see something that gives me 78% annualized return, I would say, hey, I can go a little bit more conservative and still make, a good annualized return on my money and lower my risk, because it's not as likely to have to buy the shares. It also depends on if you already have Intel, like, how okay are you to, be required to buy buy those shares again. So that's something. And then what percentage does that, represent in your account? So it's not for me to stand up and say, hey, I think that's a good trade, or hey, no, I don't think that's a good trade. You'd want to know those things. I'll tell you what, though, I've started trading just stuff like that's paying earnings, because earnings gives you more premium. And if you can sell a put for underneath the expected range of where that stock is expected to go, you have kind of like a safety net. Like, it could go down, but it shouldn't go down lower than this figure. So those are my favorite trades, in all honesty. But Intel's a good company. I haven't traded it recently, but I used to trade it quite a bit. And it was always kind of like a good company for people to learn on. Super strong. It's got a little bit of volatility, that sort of thing. Ryrome, I am assuming you're trading in a taxable account. Yeah, I'm not a big, I personally, I haven't had a lot of retirement money my whole life. So I like to spend the money, right? So I'm not of the age where I can pull money out of a retirement account. And I like to make money, and I like to spend money probably equally as much as I enjoy making money. I like to spend it. And so I personally use a non-retirement account, but I trade in an entity account that gives a little bit of like tax advantages. I'm not a tax expert or anything like that. But yes, and taxes are a thing. You're going to pay short-term capital gains on your income. It's just the part of doing business. But yeah, that's how that works. Cool. Let's see. I think nobody's got any other questions. I don't see anything else in the chat. It's almost 40 minutes. I'm gonna cut it here. I hope this is helpful. So if this is helpful, let me know. If there are other things that you want to see in these live streams, like, this is a big commitment. Every day, every weekday, I'm here 12 o'clock like clockwork, teaching you and for free. So I really want you guys to learn. So if there's other things that maybe you might want to see, reach out to me. Check out the app. Like, I'm going to show you what the address is. It's apps.cressivo.com, but you can also go to my website. You sign up for free. There's a 7-day free trial, and there's tons of things that help you not just make more money. Because listen, anybody can make money, especially if the market's going up. That's not the hard part. That's the easy part. But help you not lose your money. That's the harder part. That's where the finesse comes in. So yeah, if you're not an app subscriber yet, man, you're missing the boat. And you should do it while it's only $99, because the value that you get is far exceeds $99 per month. Which broker do you use? Arla says, I use E-Trade. I have used E-Trade in the past. I've used lots of different broker-dealers. Right now I'm using Schwab. So that's my broker-dealer currently. But I've used E-Trade in the past, and they're pretty good. I've used Interactive Brokers many years. I've used Tradier, I've used Alpaca, I've used Tasty, I've used TradeStation. They're all kind of similar. You want to understand, like, for me, customer service is most important. So, like, I feel like Schwab is really good. If I have a question, I call them, and they're not condescending, and there's usually a favorable experience. Whereas previously, I disliked that with Interactive Brokers. They're all kind of the same. I don't look at fees or prices. They're all kind of similar, and I feel like that is like small, and that's not as if I pay 50 cents a trade or 70 cents a trade, it's not going to change my life. Whereas if I have an issue with customer service, that's a little bit more important for me. So yeah. And by the way, this app, you can sync any broker to this app, almost any broker. You just go to settings here and you go to connect a brokerage. There's some broker, somebody asked me recently about Merrill Edge. That's not on here. They kind of suck for options anyway, so you probably don't want to use them. But Schwab, Fidelity, Robinhood. Robinhood, I've never used Robinhood, but I'll tell you, I've worked with some people that have used Robinhood, and I don't think they're all that great either. Like, you cannot you can't look at a lot of reports with them. You can't download CSV files. E-Trade, Interactive Brokers, if you're overseas, they're the best. Like a lot of you guys are not necessarily in the US. If you're in Canada, Europe, Australia, Interactive Brokers is probably the best option for you. Vanguard, Tasty. I mean, there's a whole bunch of Webull, lots of different choices on here. I'm in the process of trying to white label a broker-dealer because I think if I wrap everything all together, it just gives that much better of a customer experience. So more to come on that. Brandon says Robinhood for me, LOL. Robinhood is interesting because I think they started out as like, hey, buy this half a share of this, and that was like their target market. Yeah, I mean, I don't know. I was walking through Robinhood with someone recently, like through screen sharing, and they don't give you a lot of data, so. Yeah, not my favorite, but as I understand it, I think they're really easy to use, right? To click, and they're mobile friendly and all that jazz. Okay, cool. So anyway, I want to thank you guys. Listen, first of all, before we cut off, give yourself a pat on the back because you guys are action takers because you're here on this channel and you're watching these live streams, and a lot of you come back every single day. I love that. Like those successful, success is defined by a few different things, and there are certain characteristics that I see in successful people, and one of those characteristics is that insatiable intent on learning. Let me just watch all your videos. Let me just watch all your live streams. Let me just ask all these questions. So I think that's amazing that you come back day in, day out, and you ask a lot of questions. I think that's great. And that is the mark, one of the marks for sure of a successful trader. So, and then it's just experience. So you just got to keep coming back and get your feet wet and get more experience. Thank you for the hearts, by the way. I love that. Thank you. So yeah, so give yourself a big pat on the back because a lot of people say that they want to change their life and then they just, turn the TV on and just chill, that kind of thing. And you guys are taking action. So bravo for that. And yeah, let me know, as you're using the app, let me know, send me an email if you want to see some different things. I'm building certain things based on people's suggestions, so that's good. And I'll catch you guys tomorrow, same time, 12 o'clock Pacific. And in the meantime, make it a great one.